Welcome back to the channel, guys. I'm your host, Buckning, and today we are going to talk about dollar cost averaging. What is dollar cost averaging? We'll talk about it. But if you're new to the channel, welcome. If you're not new and you're coming back, welcome back. Where we build a dividend portfolio in front of your eyes, where we talk about finances, investments, but specifically dividend investing and how to create dividends for yourself, which is a good retirement plan. And so, if you find any value throughout any time of the video, leave a like, leave a dislike, and even consider subscribing to the channel, because we're going to put 2 to 3 videos out a week, just to educate, new investors, seasoned investors, veteran investors in the world of investing. And this is all my opinion. And remember, I'm not a financial advisor. I'm definitely not your financial advisor. This is all my own opinion. And so, before we do that, we're just going to go into the portfolio that we started this week, and update you guys on the $100 a week that goes in there. And then, we'll just keep updating you on Tuesdays when we do the transfers from the bank account to this account. And then when it gets in there, we'll buy some shares. As some of you already know, which stock I am picking for the month of September. If you haven't seen that video, go check it out. And then we'll do an end of the week update as well, and maybe we'll talk about something. So we'll shoot for 2 to 3 videos a week. But just wanted to say a big thank you to everyone who is supporting the channel. The last video did way better than I thought and way better than I expected. So much appreciated. Thank you, guys. And let's go ahead and hit that like button just so that we can get the exposure, and definitely helps the channel grow. So thanks a lot, guys. So and girls and ladies, whatever. But we'll just get into the portfolio here. So today we actually we are up by 0.26%, up by 51 cents. For the week, we were up 23 cents and up of 0.12%, 0.12%, so 0.12%, not even a percent yet. For the month, same thing. For 3 months, same thing, up 23 cents and 0.12% up. Okay. Today we purchased a few more shares of Bank of Nova Scotia. So we'll just go right into there. I bought it the first thing in the morning as soon as the funds got transferred into the account. And so today's return was 51 cents. Total return is 23 cents. Currently, our average price is 55.30, which is what we're going to talk about today, is dollar cost averaging and what kind of strategy that is. But for now, we own 3 shares of that in a tax-free savings account. Our total value is 166.14, as you can see on the screen. So we'll leave it on here. We'll just close this out. And just to give you an idea of what we have done is, so today at 7:42 a.m. This is my time. It's not, I think, a lot. The market, I'm 2 hours away from where the market is, so I have to get up pretty early as soon as market opens. And so just so you guys know, I was able to buy 2 shares at $55.22. So yes, and also other exciting news, which I will put in the comment section below, is we got a $10 referral cash earned. My friend showed me this, so he finally got his $10. I got my $10, and for the next trade. So I'll leave a link in the description below if you guys want to take advantage of that. If you're new to trading, all you have to do is put $100 in there. When you trade $100 worth of stocks, and then it'll go in there. You don't deposit and then get it. It's $100 worth of stock. So that is there, and then 2 days left to win the 5,000. I think that's how that goes, but that's not a big deal. I'm not worried about it. Let's move on. I've already taken 4 minutes to talk about that. My apologies. Let's just get back into it. So we'll make it very, very quick, as and simple as we can. And so this is where I'm tracking my dividends currently. And so this is trackyourdividends.com. And this is where updates everything, and it keeps track of everything, which is pretty awesome. So this is not, you don't have to pay for this, but currently our portfolio balance was $55. Our dividend yield is 6.5, and yield on cost is 6.49. We'll also talk a little bit about that. And the annual dividend income for the year is $4. So on, I think it was Wednesday, we bought one share at the average cost of $55.47. We lost 9 cents. And that was the current dividend yield now, and the yield on cost for us is 6.49, annual income of 3.6. And so we are going to add a new holding, and this is a great way to track your dividends, like I said. And we are going to put in the ticker symbol BNS.TO, not that one, this one, because we are in Canada. And the shares we bought was 2. And if you remember from what I was talking about earlier, we bought 2 shares at the cost basis price of $55.22. And we can just go add. Takes a few seconds to update. And there it is. So now, if you look at it, what has changed? Portfolio value is $166. Our dividend yield is still 6.5 based on the price of the stock today versus the yield. So the dividend to the share price. And our yield on cost is 6.51, which is higher than 6.5, and I'll talk about that. Annual income has now increased to $11 annually, so don't forget the annual part. Okay, so changed everything, added the 3 shares of the same stock. Price at end of day is $55.38. Our average cost is $55.30, so we were able to get an 8% discount. Our profit right now is 23 cents. Let's just go with that. Our dividend yield is 6.5 based on price and yield, not price and dividend right now. And then ours is 6.51, annual income of $10.80. So what does it mean to dollar cost average? So this is a strategy for a lot of investors. It's a good strategy. And so we'll just go back to here. It's a very good strategy. So what it is averaging the cost of the stocks you buy, the investments you buy, and things like that. So I'll give you an example, and I'll help you understand why this affects yield on cost and dividend yield. Also remember, not all companies pay a dividend, so do be aware of that. Excuse me. And so when it comes to dollar cost averaging, let's just say you have $10,000, and I'll put a screenshot over here of an example. So let's say you had $10,000 and you wanted to buy XYZ share, and this person decided to put the $10,000 all in at once, compared to the person that says, okay, I have $10,000, I'm going to invest it in the next 5 weeks. So I'll put $2,000 every single week to buy the exact same shares of XYZ. And so that person who's doing that strategy is taking the strategy of dollar cost averaging. So every week he puts in $2,000, and let's say the price share is $50. The number of shares he's going to get is 40. And then the next week he does it again. $2,000. Price per share now is $40, so he's able to get 50 shares. Third week does the same thing. Now the price of the share is $20, and he's able to get 100 shares. Fourth week, same thing, $2,000. Price share is back up to 40. He buys, he gets 50 shares. And the last week, $2,000 at the price of $50 per share gets 40 shares. So total invested is $10,000. The average price that he bought every single share at, from doing it week after week after week, is $35.71. And the number of shares he has is 280 full shares. And so compare that to the first example, the guy who took $10,000 to put into this stock all at once. He bought it at the exact same time as his friend, but he was only able to purchase it at $50, which would only get him 200 shares. So you can already see the difference in comparing lump sum and trying to time the market at whatever price, or doing it all at once, compared to doing it over a period of time. The person who did it over a period of time using the dollar cost average strategy has 80 more shares than the guy who invested $10,000 all at once, and his price is per share is much less than the guy who put in $10,000 at once. $35.71 compared to $50. I would rather buy at $35.71. And so why is that important? You may be asking, sir, why is that important? Why does it matter if someone puts it in all at once or over time? Well, when it comes to dividend investing, and this is my opinion, there are cons, there are pros to everything. When it comes to dividends, the yield on cost, so we'll go back to this one here. So let's take that same comparison of those two examples and go face to face. So the first guy bought it at whatever price, bought 200 shares at $50, and he gets a yield of 6.5. Okay, let's say, or whatever, the yield is whatever. And then the dollar cost average guy keeps on investing over a period of time. His cost of owning the same share is much less, but he's getting the exact same dividend that other guy is getting. So if you look at the screen here, my yield on cost is actually much higher than what the current yield is, which is stating that I get a higher dividend than the person who is buying today. Because another example is going back to like when Coca-Cola started, you could get like a share for like 30 cents. Now I think the share is like $50. But if you compare those two shares at different times, they are getting the exact same dividend, but the cost to get that dividend was much less for the person who bought it 30, 40, 50 years ago compared to the guy who's buying it today. So if that makes sense, I hope it does. But that is dollar cost averaging, and hopefully it does make sense. And don't get me wrong, there are pros to this, there are cons to this, but what you want to do is be able to bring down the cost of per share down and down and down whenever you can by investing over a period of time, because it reduces the risk. And there are cons to it, but this is just my opinion. Do your research, obviously. And so now, as you saw last time I bought the Bank of Nova Scotia stock, it was at $55.46. But I bought more today, and I brought my cost down about 16 cents, which is huge, which can be massive. And so that is dollar cost averaging. Hopefully it does make sense. Hopefully, it's something you obviously can understand. And so, yeah, that's pretty much it for today's video. I hope that adds value. If it did, or if it does, leave a like, subscribe, comment. And if it didn't, leave a dislike, honestly, and give me some feedback. Hopefully I try to keep it super simple. The abbreviation that I like to use is KISS, KISS, keeping it super simple, because investing shouldn't be hard. It shouldn't be this complex thing. And yeah, that's pretty much it. So hopefully you guys did enjoy the video. Again, leave a like, comment, subscribe. Loving the support of the channel, and we'll probably see you guys on Tuesday when we transfer another $100 into the TFSA, and then once it gets in there and I can trade, I will purchase the stock, Bank of Nova Scotia, which is the stock of the month. And yeah, we'll keep doing that every single week, because that's the channel. Well, we are the channel that puts in $100 every week to buy dividend shares, to show you how easy it is to build a dividend portfolio. So we'll see you guys in the next one. Bye.